So, leading on to that, trading tip of the week: don't get married to your trades. Uh, there's other comments I could make there, but I won't. So, trader, investor, you know, investors, they hold on to their positions much longer. To a degree, I sort of put investors and crypto traders. Don't get it wrong. I'm not saying that they're both the same, but what I'm saying is they both have this sort of hodl impact. Where they just want to hold on to them regardless of where the prices go. And I know from investors, they're looking for that 5-10 years ahead potentially, and because of that, they're comfortable with the price going lower because they'll just keep adding to it. Obviously, it depends how much capital they've got. For traders, they're in and out of their trades, sometimes within seconds, hours, days, etc. But they don't hold on to them as long. Now, and that's sort of important for both sides of the market. It's when you're taking losses because that helps to prevent account destruction. So you need to have that stop loss in place. But it also is important for you, when you're going to take your profits as well, to make sure you're protected both sides. It's great seeing everything go into a profit, but if you don't take that from time to time, then that can disappear, and then of course you always regret it. Now, for me, the way I sort of deal with that is I sort of exit by percentages of my position. So I sort of cut the size of it as the market's moving more and more in my favour. By the end of it, I end up with a really nice average. But the fact is that if the market suddenly turns and I'm not out of all of it, at least I've got something out of that trade. And again, I can sort of help you with all of that. So, everyone sort of focuses on the stop loss, or you should most definitely, but taking profits for me is as important as well. You need those good trades to pay for any bad ones. And of course, if you are in that situation where you are doubting a position, it's really simple. Get out. Don't hang on to it. Now, for me, when I go into a position, yeah, I'm confident I'm going to make money. Otherwise, why have I got into that position? Now, if all of a sudden I start to doubt just because maybe the market's not doing what I expect it to within a certain time frame, if I get any element of doubt starting to creep in, I would start to reduce the size of my position. And you'll be amazed once you've taken 25 or 50% of that position off, that you're much more relaxed about the rest of it. And of course, for me, it's all about the risk. So there, whether it's a small profit or a small loss, I'm actually reducing my risk, my exposure, and protecting my capital. And there's sort of a whole variety of different strategies and techniques you can do to protect all of that and control all of that, which I'm happy to go through on one of our one-day workshops. Okay, so now we're going to move on to the technical analysis part of the insights. Just to remind you, the black numbers in the right-hand column are just support resistance levels that I've identified generally off of trend lines. Brown numbers are breakout levels. And then the claret numbers are just sort of horizontal lines that I've drawn in where I can either feel that they're support and resistance, technically from what I'm seeing, or they're based on double or triple tops or bottoms. Fibonacci colours are there, pivot points are there. I've added pivot points to 1 or 2 this week, so they will be relevant. Okay, so start off with the Dow Jones. This finished the week lower. Funnily enough, if you look at the candle for this Friday and you look at the candle for last Friday, they're almost identical. Just something I noticed while I was doing the analysis. Okay, so resistance on the daily at 34,773, also at 34,538, with support at 32,988, and then lower down at 31,731. I see that as a breakout level, should it get down there. On the 30-minute, market sort of did have a little bit of a bounce late Friday afternoon. Just a little bit of short covering, I would guess, for over the weekend. But pivot points worked really, really well. I mean, you know, you can see on Fridays and Thursdays that S2 worked really well, and on Friday S1 worked really well. And you can see that each time they then went back up to test the pivot point themselves. So, you know, they are great and they do provide trading opportunities. Again, if you don't understand them, come on our technical analysis one-day workshop, and I will go through and teach you, explain to you how to use them properly, like a pro trader. You know, pro traders have been using them for decades in all the different asset classes. Okay, moving on to the S&P. Resistance at 42.29 and also 41.86. My key level is above that at 43.0275. It got there in August last year. It got there in April, May last year as well. I'm hoping that if it does have a rally, it's going to push up and just get to there, because that would be the area where I start to buy put options. So, just looking at it again, so 42.29 and 41.86 are the resistance levels. On the support side, we've got 4,053. Then we've got 39.27, 38.20, and 37.50. On the 30-minute, got resistance at 41.45. I've got 41.12. That could be sort of a breakout area. I'm not really that sure. I'm just looking. You know, I love these long candles because generally when I see the market with long candles, when it sort of breaks back into the body of that long candle, I you know, I expect less resistance or less support as the market's going in the opposite direction. And quite often you sort of get that mirror image of long candles. And again, I've got my own sort of idea of why that is, which I do share on the courses. So with the 30-minute, the other resistance level is at 4,088 with support at 4,057. Moving on to the Nasdaq, and again on the Nasdaq, you'll sort of notice that the range Friday was almost similar to the previous Friday's range. So I've got resistance at 13,108 and 12,784 with support at 12,251 and 11,868. Nasdaq 30-minute, I've got 12,532 as a breakout level, should it get up there. Below that, I've got 12,450 as resistance and 12,408 with 12,274 as support. Just remember, you know, you can always take screenshots or just pictures of these on your mobile just as reminders. The daily ones, they're going to hold in for ages. Obviously, the 30-minute ones will change more regularly. The Russell probably performed the best of all the indices, US ones last week. Resistance 1972, support 1885 and 1730. On the 30-minute, I've got resistance at 1970 and 1953 with support at 1937 and also 1928. Now we're just going to look at a couple of currencies. So last week the dollar came back stronger. You know, if you look at the Dixie, which is the dollar index, you know, it's based against 6 other currencies. The high it got to sort of towards the end of last year was 111. Earlier, you know, quite recently, really, it got down and tested the 100 handle. Now it's back to about 104. And of course, you know, part of that is because the expectations of their rate hikes has increased. For me, it should be a lot more about the economy because they've been putting their rates up higher than anyone else anyway. They've been more aggressive, so you know, it shouldn't. That's just the fact that they're slowing down shouldn't change the fact they've still got the strongest economy and probably deserve a stronger currency. However, you know, again, if they've got a very weak currency, that does it add to their inflation because they're going to import inflation because they're going to be paying higher prices. I would say cable and the euro against the dollar probably performed better than most of the peers. And again, that's because there's expectations that there's more rate hikes to come from the UK and the EU. So we look at that. I mean, it did get down into the 119s on Friday, the pound against the dollar. I've got resistance at 123.58. I've got support at 119.22 and also at 117.19. On the 30-minute, I've got resistance at 121.87, 121.64 and 120.53. And support at 120.12 and 119.26. Moving on to the euro, resistance is at 108.25 with support at 106.25 and 105.30. The 30-minute, again, you can see the pivot points working really well there. If you look at Thursdays, it bounced off of that S1 level really well, and on Friday off the S2 level really well. So I've got resistance at 107.12 and I've got support at 106.45. But you know, if you use different charts, whatever, if you can find the pivot points, they're well worth looking at. Whether you trade off of them or if you don't understand them, again, as I say, you can always reach out to me and I'll give you a little bit of help. Now, the dollar rally came obviously as the Fed speakers continued to warn that their rates need to go higher. But also remember the dollar is a haven trade. You know, it's a risk-off trade. So if investors start to get that little bit more nervous, they're going to sort of go and seek out some of these havens. They used to be called safe havens, but you know, to be correct now, because that can be a little bit misleading, they're just called havens. Okay, moving on to crypto. So yeah, Bitcoin seems to be finding more fans these days. You know, it's gone back to pretty much test the highs from August, and you know, okay, that was when stocks were rallying, and again in April and May. So you know, is there sort of some form of correlation still there? We'll look at that on a couple of slides forward. Now, I got resistance at 27.345, which is my breakout level. It's been there for ages because there's that gap in the market to fill at some stage. Well, hopefully anyway. You know, I am a little bit of a fan of crypto. I'm more into the metaverse these days. Okay, so and support at 22,102. Now here I put the pivots on because again they've been working quite well. So resistance 25,140 and support at 23,925 and also at 23,435. So here's our comparison of Bitcoin versus the Nasdaq on a 30-minute chart, with Bitcoin in red, Nasdaq in the black, and you know, yeah, that correlation just does seem to diverge more than it has in the past. Bitcoin starting to regain a little bit of that volatility as the prices increase as well. Moving on to gold, I've got resistance at 19.18, support at 18.27, 17.97. There's a breakout at 17.34 if it should get down there. Gold was under pressure last week. With the 30-minute, I've got resistance at 18.54, support at 18.50. So, I would expect one of them to get broken pretty early on. Then support at 18.31 and 18.28. Finally, oil. WTI. Here we're looking at the daily. I've got resistance at 79.95 with support at 72.70, 72.34 and 70.04 should it get back down there. The resistance on the 30-minute is 77.68 with support at 75.98. Now, I didn't talk much about it during that because, I just want to go back and just sort of talk about, last week's rally, so the previous week's rally was where it got back to $80 after Russia deciding to reduce production by 500,000 barrels a day. But, the market struggled. And then, after the US build came out, Wednesday with inventories, I think it was around about 16 million. That really set the tone for the rest of the week. And, the other thing to remember is that with commodities, they're generally priced in dollars. And if the USD, the dollar is strengthening, as it did last week, that adds more pressure to the commodity prices. And the reason for that is higher the prices, the more of your local currency it costs you, so it tends to weaken demand slightly. More to it, but that's sort of like the basics of it. However, that said, the dollar will impact it slightly, but it's not going to make it change direction. So, if you've got a stronger dollar and oil's bearish, it sort of accelerates that move. If the dollar's stronger and the oil is bullish, then it just slows it down slightly. The momentum behind it. It's not going to make it change direction. So that's the end of that, and I hope you've enjoyed it. I'd just like to sort of go through and explain a little bit about what we do, Symax Fintech, and some of the services that we do provide. So if you're sort of looking at this, then our daily newsletter is great because it complements that. But with the daily newsletter, you're getting fresh daily chart levels and pivot points every day. Plus, on top of that, you get all the global news, which I've filtered through so you don't have to. Everything that's relevant is there and it's in your inbox in the morning to get you going. We also provide one-day workshops through our academy. We do 1-week courses, which take you from zero to hero in just 1 week. Provide those foundations on which you can build your trading career. Workshops are just more generally just to fill in the gaps, I would say. Although we do one trading for beginners just to help people to decide whether trading could be for them or not. And then if you really sort of intend to make it a career, then our comprehensive accredited masterclass course is really sort of designed to provide all the knowledge and trading tools that you're going to be needing to navigate today's markets. And that's on any asset class. I trade everything. On top of that, we do trader mentoring, again, just to help you to get to that next level time and again. So, if you're struggling to reach that next level in trading, then reach out and we will arrange something with you. Consulting, we help companies with hedging FX and commodity exposure. When it comes to our educational content, we provide that to individuals, exchanges, brokers. Of course, we've got all the courses. And we're getting more and more demand from that from brokers as well as sort of other areas of individuals. Now, if you don't have the capital to trade, it's not the end of the world. And again, how much capital is enough? So, it depends on how you're going to trade. So be careful there. But through our partner, you can gain one of these funded trading accounts if you qualify. And there's the link to it on there, which you can just go on and take a look at. Reason we partnered up with them, there's no time to put, so you haven't got to make anything within a certain time frame, etc., etc., which does sort of remove a lot of the pressure. Now, if you want to contact us, info@symaxfintech.com, or if you've got anything that you'd like to ask me personally around trading, then chris.tubby@symax-int.com. So hope you've enjoyed this. Have a great week's trading. There's lots coming out, and just take it easy, and of course, as always, be lucky. Bye for now.